In today's video, I'm going to share with you everything you need to know about repayments, including how offset and redraw will affect it. So stick around, and if in the end you do like this video, it'd mean the world if you could subscribe. You can always unsubscribe and it's free. Let's jump in. Okay, so let's have a quick look at the two different repayment types you can choose from and how they both work. So let's start off first with principal and interest. So looking at it from a graph perspective, what we've got on the left-hand side is your loan amount. So we'll go for 300,000, and then once it's paid off, it's nil. And then on the bottom here, we've got time. So from 0 years to 30 years. So looking at the common trajectory for a principal and interest repayment, we go from 300,000 to nil over 30 years. And we can see that's a gradual, I mean, it's not the best graph here, but it's gradual. And over time, at each repayment, it does decrease. Okay. So if we have a look at how that compares to interest only, we'll have the same graph, but this time the loan amount of $300,000 actually is never paid off. So that's a straight line, and that'll happen indefinitely, so long as it's on an interest only term. Okay, great. Now we've got the fundamentals of what a principal and interest repayment is. Let's have a look at how it's affected. Okay, so here we have a repayment calculator. And let's have a quick look at how the repayments work. So what I've got here is a $300,000 home loan over 30 years at 5.1%. We won't put any extra repayments in, and the repayments are $376 a week. Now, how repayments work is very simple. It's the larger the loan amount, the shorter the term, and the larger the interest rate, the higher the repayment. If we go ahead and reduce the loan term, we can see that that increases the repayment to $408 a week. Alternatively, we bring it back to 30 years and we increase the loan amount, that too will increase the repayments per week. So now we know how repayments work. Let's go ahead and deep dive in looking at how an offset or redraw will affect the loan repayments. So how will offset and redraw affect your repayments? Well, firstly, let's understand what they are, and then we can look at exactly how they'll affect your repayment. So on the left here, we've got your home loan, and on the right, we've got an offset account. Now, let's say that we've got 100,000 owing on the home loan, and we've got, say, $20,000 in the offset. Well, essentially how this will work is that whatever's in your offset will be linked to your home loan account. So instead of paying $100,000 in interest here, you pay the difference. So in this case, $80,000. Now we know what the offset is. Let's have a quick look at how redraw works. So redraw is very similar in that you will save interest on the savings in your account, but there is a bit of a process in order to use it. So in the same example, we've got a $100,000 home loan here, and you've got $20,000 in your everyday account. In order for this money to be used and to save interest on, you need to transfer it from your everyday account into your home loan. What that'll do is it'll reduce your home loan balance from 100,000 to 80,000. With the balance now at $80,000, the limit will remain at $100,000, essentially meaning that you've got a difference of $20,000. That is, you're in advance of repayments by $20,000. At any stage, you can go ahead and take the balance of $80,000 to the limit of $100,000 and redraw that money, putting it back into your everyday account. Excellent. We have a great idea now how both offset and redraw works. Let's now look at how they affect your repayments, and remembering that offset and redraw does the exact same thing, In both cases, you'll save the interest on the $20,000 against the home loan. So essentially, you don't pay the interest on that $20,000. Okay, so let's have a look at how offset will affect this home loan. So in this example, we'll have a $500,000 home loan. Now, a few things to keep in mind with this home loan is it's a 3% interest rate. We've got principal and interest repayments, and we've got a 30-year term. Now, with the offset facility, we're going to have $100,000 in this account. And remembering the offset is directly linked with the home loan. Okay, excellent. We've got all the basics. Now let's have a look at the repayments so we can figure out exactly how your principal and interest repayment will be affected by the offset facility. So what we've got here is back to the repayment calculator. I've plugged in 500,000 over 30 years with a 3% interest rate, and our repayment here is $2,126. We'll go ahead and get that over here, 2,000 per month to $2,108 per month. They're our repayments. Okay, great. We've got a baseline. So what we now know is that we're saving $100,000 in interest. So bringing up the calculator, what we can do is we can go $100,000 and we multiply that by 3%. That's the interest that we save. And we divide that by 12 months. So on the $100,000, we're saving $250 in interest each month. Okay, you're still with me? So $250 per month in interest savings. So what a lot of people get confused about is that they believe their principal and interest repayment, in this case, the $2,108 will decrease. But in actual fact, it won't. And I'll show you why. With your principal and interest repayment, a portion will go towards your rental or your interest, and a portion will go to your payback or your principal. Now, let's analyze this and know exactly how much this will be. So back to the calculator, we've got a $500,000 home loan. Again, we'll multiply it by 3%. And over 12 months, it's approximately $1,250. So our interest is $1,250. Our principal is the difference. So in this case, we'll go $1,250 minus the $2,108 is $858. In this case, $858. Now, all the offset will do is reduce how much you pay in interest and increase how much you pay in principal. In this case, what we'll be doing is we'll be essentially transferring the $250 we're saving. So we'll go 858 plus 858 plus your 250. 858 plus your 250, and that's your new component, which is going to your principal. Essentially, we will now have $1,000 that's going to your interest, and the $1,108 going to your principal. So the long and short of it is that your repayment will always remain the same. In this case, $2,108. What changes though is the amount which goes to your interest versus your principal. Remembering that your interest is the rent of your home loan, so you don't pay it off, and the principal is your payback. That is how much you're paying back to the provider. That is paying off your mortgage. Now, if we look at it from a graphical perspective once more, it's going to look very similar to this. We've got 0 and 30 years. We've got 0 and $500,000. Without the offset, your graph or how quickly you'd pay off your mortgage would look something similar to this. But with your offset, because more is going to your principal, it'll look more like this. That is to say that you're paying off your home loan in, say, 25 years instead of 30. And that's essentially what an offset facility does. And that's how an offset facility or redraw account will help you pay off your mortgage quicker, but it won't change your principal and interest repayments. However, your interest only repayments is a completely different story. And we're going to get into that now. Okay, so looking at an interest only scenario and how this will affect your repayments, what we know is we know that your repayments per month on an interest only uh, calculation based on a $500,000 home loan on 3% is $1,250 per month. We also know with having an offset facility of $100,000 that the interest savings is roughly $250 per month. So in this example, your repayment will reduce. Essentially, rather than paying the $1,125 per month, you only pay the $1,000. And it's because with an interest only term, you only have to pay the rental of the loan amount. In this case, the rental isn't a $500,000 home loan, rather a $400,000 home loan, or the difference between the $100,000 and your $500,000. That is the $100,000 in your offset facility and the $500,000 home loan that's payable. Looking at a graph, and you'll see that nothing changes. That is to say that over time, that you paying off the mortgage doesn't change. It's because you're not putting anything towards the payback or your principal of the mortgage. And there you have it. Now you know whether or not an offset or redraw account will affect your home loan repayments. And remember, if you like this video, feel free to click that subscribe button now. And here at Hunter Galloway, we get home loans approved. So if you live in Australia and looking for a mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and I'll catch you next time. Bye for now.